Hello everyone, welcome to my YouTube channel again. This is David Onemi, and if this is the first time you are coming across my video or any of my posts, I would like you to take out time to kindly like and then you subscribe for updates anytime I release videos, and so that if you're really gaining value in my videos, by the time you like and then you comment on it and then you share, you discover that YouTube are actually recommending the videos to others too. You don't want to make money alone in this industry. So this is a post analysis video for Great Britain card. I've already done the pre-analysis for it when the market was closed, and when you check my videos, you will see that I've done the pre-analysis for it already. So first and foremost, presently I'm in this trade and I'm selling currently. So what I did was that I discovered that the market from the daily, it's an uptrend, but when you go down to the weekly, you discover that it's a ranging market, right? So that was the first thing we noticed here, we discovered when one of these my videos where I talked about 5 things to look out for before you place your trade, right? So that was where I did the analysis for Great Britain Canadian dollars, right? So when we go down to the weekly, we discover that the market is a ranging market, right? But from this zone here, from this level here, we discover that it's an uptrend right now. But when you zoom in, you discover that the market has respected this zone 1, respected this zone, and now is about to respect this zone here, right? And I remember saying that there are 2 ways this market can get to, because from the weekly time frame, studying the candlestick pattern, you discover that there are more sellers in this market, right? Look at the formation of the candlestick and look at the formation of the bearish candlestick versus the bullish candlestick. We discover that there are still buyers in this market. However guys, we discovered that when the market got to this zone, it respected this zone, it also respected this zone. And if we go back to previous data, we discover that the market has also been respecting this zone, right? And then we discover that the market respected the zone over here too, guys. So there are high chances are that when the market gets to this zone, it will definitely respect this zone here before coming down to this level, right? And then I remember telling us that, but for now, let's look at the big picture, right? Let's look at the big picture. Although the market is a ranging market, sorry about that guys, a ranging market from the weekly, and then we went down to the daily, to study the market, and we discovered that, okay, from here, if we want to read our data from here, if we want to read our data from this level, discover that it's an uptrend, right guys? It's an uptrend, right? That even though the market got to this point and the market respected this level and came down to this level, now one thing I said was that the market was a strong bullish market, right? But when the market got to this level, it came down to this level, and look at the formation of the candle. It means that we need to pay attention to this level very, very well. Anything that stopped this market from going above this level, we need to really take note of what happened there, right? And if you've been following my teachings, I will always say that the chart you are seeing is simply the interpretation of the real world market, the behaviors between the buyers and the sellers, right? That's the big boys now. So what you see in this chart, it's simply a representation of what is happening in real life, right? Just take, for instance, imagine 2 businessmen who wants to purchase a land, right? So one is bidding for a buyer, another is bidding for a sell. So there's a buyer and there's the seller, right? And there's the middleman who wants to sell. So whoever brings the larger amount of money will get the land. You understand? So, and it could be that they are fighting for something, maybe a product or something, just to give you a glimpse of what is happening in the market. Maybe a car, you want to buy a car, a Ferrari car, or you want to buy a house, right? You discover that, okay, that Ferrari is now becoming very, very expensive, and those who bought from here, right, have more advantage than those who are buying from this level. So now, those, for instance, again, those who bought from here have high chances of making more profit than those who are buying from here. Now, you can't buy your Ferrari car from this level anymore. So you need the market or the seller to reduce the price for you, right, before you can buy. So when you get to this level, you discover that people who bought from here are not willing to buy anymore at this level. So there needs to be a reduction in the price, right, for more buyers to come in. And once the seller discover that the buyers are not interested in the product, what do you expect? The seller will have to reduce the cost of the product for more buyers to come in. And then now we discover that, so those who bought from here to this level discover that as the market got to this level, as the product got to this level, it came down to this level. Now, in real life, you discover that the market now is getting to this level, this same level where it got to. Under normal circumstances, if you're using your logic, you discover that the market is about to play or repeat itself, right? So in other words, when the market gets to this level, if you were in this market, you would tell yourself, once upon a time, this market got to this level, so I will not buy at this level, because when the market got to this level, it came down to this zone. So let me hold on and see if the sellers in this level will still reduce the cost of the product at this level here. So this is just a logical interpretation of what is happening in the market between the buyers and the sellers. I hope I was able to explain this thing very well for you guys. So that's why I am saying, based on price action and past analysis, that when the market gets to this level, there are high chances are that buyers who started buying from here will come out of the market so that they can start selling their products to this level. This is what I want you to take note of. So that's why I said that when the market gets to this level, it came down. Now the market is almost getting to this same level, so it's coming down. And this is why I entered a sell at this level here, guys. This is why I entered a sell when I said, okay, we'll be waiting for some kind of patterns, understand who are the major players in the market before we will now make our decision, right? So I did this analysis where the market was closed, right? And I discovered that there are buyers and then sellers. So higher, low, higher, low, higher, low, higher, low, higher, low, higher, low. So there are more buyers in this market than sellers. But all these red candles you're seeing, these bearish candles you're seeing, is an indication that sellers are interested in this market, right? If you go down to a lower time frame like 1 hour, you discover that there are more bearish candles here, right? So this is daily, right? So one candle is representing 1 day. That means there are sellers here, sellers here, sellers here. So what is it telling us? Sellers are in this market. They are waiting for an opportunity to take advantage of this market to this level here. So I went down to my 4 hours, right, guys? I went down to my 4 hours to try to understand the market, right? I went down to my 4 hours, right? Look at a strong bullish candle, right, guys? Look at how buyers took over this market from this level down to this level here. And then when we got to this level, I told us that the market is ranging at this level here. the market is ranging at this level here. Let me take all this off so that you can really understand what I am saying. Let me take this off. When it's time for me to apply these principles, I will show us, guys. So when the market got to this level here, we discovered that it was ranging at this level. Now, number one, we have a target that this market will get to this level, and then number two is that the market initially got to this zone, right? The market got to this zone here and came down, tried to get to this same zone, and now it's coming down. What was it telling us? It means we need to be very, very careful at that level. We need to be very, very careful at that level. And I told us that you could either scalp, right? You could either scalp for buying a little, but the major move I am seeing in this market is a bearish market, guys. It's a bearish market. Why? Because of the formation of these candles here, the bearish candles here, guys. Look at higher low. Look at from here to here, we can say it's 100%, right? But look at the retracement. It's about 50% retracement, right? 50%. And look at the bullish move, right? And then look at the bearish move from here to here compared to here to here. We'll say it's about 40% retracement, right? And we discovered that the bullish market could not break above this level anymore. What was it telling us? It could be that the buyers are no longer interested in this market. The price is too high for them, so they are either looking for a reduction in price so that they can also buy at another level, right? So hence the idea behind the selling market, right? So I came down to my 1 hour, right? I came down to my 1 hour. Having observed that the market respected this zone over time, I drew my trend line here. I drew my resistance line over here, right? The market respected this zone here, 1, 2, and then 3, guys. 1, 2, 3, right? So I knew that, okay, something is already happening around here, though there's a bullish candle here. But look at the bearish candle. After this bullish candle, we discovered that the bullish candle that formed compared to this one, you discover that the bullish candles are already weak. Now, the idea behind studying your candlestick is not for you to say, okay, this is a pin bar, this is a hammer, this is inverted hammer. No. What you should understand is the idea behind the formation of the candle. Why did this candle move from here to this point here? Why is there a bearish candle here? Why is there a bullish candle here? You need to understand that from the initial, I told us that every candle you see is simply the interpretation of what is happening in the real world. What is happening in the real world, guys. So I discovered that the formation of this candle here, the bullish candle, compared to this one, is weak, guys. Is weak. So there are more sellers, guys. There are more sellers in this market. So I went down to my 15 minutes to look for what is happening. Sorry about that, guys. I went down to my 15 minutes and I discovered, I told us that I saw this double top, right? This is M formation. That anytime you see something like this, it's not that it will always happen, but it's just an indication that, okay, the market is about to take a new direction. So this is a double top, which is M pattern, right? So if you study types of pattern, you discover that there are double tops, inverted head and shoulder, different kinds of chart patterns, right, in the market. So guys, this is what I observe, and I told us that I'll be looking for more of a sell, but I'll be very, very careful. I was observing this market once the market opened, right? The market opened and I entered this market around 4 something GMT plus 1, right? So when the market opened, I started studying the market and I discovered that it was not the right time to enter this market. Let me go down to 3 minutes so you could see what I'm talking about, guys. Now, this is my point of entry, right? The market was here when it was closed. The market closed around this level here, and then immediately the market came down. I was observing this market from morning till 4 p.m. GMT plus one. Now the market got to this level for traders who are not really patient. Immediately they see this move, they want to enter. But I said no, let me really hold on, because I wasn't sure of what the buyers, if the buyers are still interested in this market, right? Now look at what the market, it came down to this level. I started going up. Immediately I saw this move. I said, okay, it seems um, the buyers and the sellers, they are in equilibrium, because you could see a ranging market at this level. And I told us that whenever you see a ranging market, it means the buyers and the sellers are in equilibrium, they are in agreement with the price, right? And it means either of them, the big boys who wants to buy or who wants to sell, they are trying to make an agreement, right? So whenever you see a ranging market, you hold on and then you observe. So whenever you see a new move below or above the ranging market, it means a decision has been made by one of the big boys. A decision has been made. So I saw that this bullish candle, the bearish candle rather, came down above the ranging market here, because I drew my trend line here. Sorry guys, I drew my support line here. Now I notice the formation of the candle, that initially the market got to this level, this candle got to this level and came down. Now it went up to this level, but it did not reach this same level it got to initially. I don't know if you are catching what I'm saying, guys. Now this candle, the retracement, did not get to this same level. At this point I was already observing this market. Then I waited for the first move, right? Then I waited for a pullback. Then I went down to my 1 minute to see what was happening there, and that was when I entered this market at this level here. Because look at what I did, guys. I just took out my trend line, right? And I tried to touch this point that the market has been respecting, this 3 point here. You could see the lower low I was talking about, lower high, and then I entered from this level here. You could see, right, lower high, right? So this market couldn't go back to this level, right? So that was when I took my entry at this level here, guys. And since then you could see that the market has been playing, although initially the market got to this level, and then it went back to this same level where I entered from. Now this is why you need to know where to put your stop loss. For some people, once the market reach this level, they'll want to quickly break even, and once you break even, you discover that the market will retrace and then hit your stop loss, and you discover that you may come out with negative, maybe or a little profit, right? So I was observing the market, because I knew that okay, the big boys have already made their decision, right? So that was how I entered my sell from this level here, and then came down to this level. I wanted to enter another position from here, but I'm still observing the market. If the market will go back to this same level, then I will enter another position. But so presently you can see that I'm in profit, guys. You can see that I'm in profit. So this is how you do analysis for multiple time frame. And I in the pre-analysis I did, I told us 5 things to actually look out for before you place your trade. 5 things to look out for. I'll recommend that you go and watch the video so you could understand. And one of the things I said is understanding the direction of the market, right? Then you make a decision, prepare and then make a decision. Why are you buying? You need to ask the question why are you buying at this level, or why are you selling at this level? Once you can answer that question, you are good to go. And then lastly, you take your action, and then you wait for your analysis to play out, right? So the most important thing, guys, is to ask yourself, why am I entering from here? What did you see that made you to enter from here? Why are you not buying? Why did you choose to sell? You need to ask yourself that question, and once you have the answer to that question, you're good to go. So guys, this is how I usually do my analysis, and then I place my trade. But if you follow through, one of the things you will observe is patience, guy. You need to be patient. You need to observe the market. You need to study the market. Don't just be so quick to enter the market. Don't be so fast. Yes, even though the market is moving, hold on. The market will always tell you what it wants to do. If you are patient enough, guys, if you're patient enough, the market will tell you what it wants to do. I'm sure you have gained one or two things from this my video. Now I want you to like and then you subscribe so that YouTube can actually recommend this video to other traders too. You don't just want to benefit from this video too. So thank you guys once again. This is David Onimi on the Black Traders Hub. I'll be dropping more updates on the present condition of this market. Thank you for watching through. Till we see again, or till we meet again. Bye for now.